value stocks now lagging growth stocks during the equity rebound after the initiation of a technical recession, investors may be wondering if value stocks have run their course and if it's time to shift back to growth. But examining previous technical recessions suggests that this shift may be premature. History tells us that a post-recession market rebound doesn't imply growth outperformance, and that value may indeed have a long way to run. Let's take a closer look. The US is in a technical recession with 2 consecutive quarters of economic decline. Over that period, US equities fell more than 20%, with value stocks outperforming growth stocks by more than 11 percentage points. However, equities rebounded 9% in July, most after the July 26 Federal Reserve meeting. With value lagging growth somewhat in July, investors are asking if it's time to transition back to growth. Some historical context may be helpful. Since 1970, there have been 6 technical recessions in the United States. During these recessions, equity market performance ranged from a 30% decline to a slight increase. However, in the year immediately following these recessions, equity returns averaged 22%, with value outperforming growth by more than 4 percentage points. In technical recessions coupled with high inflation, as we saw in 1980, value outperformed growth by more than 10 percentage points. Today's macroeconomic and market picture supports this view. With sustained high inflation, further rate hikes on the horizon, and declining business and consumer sentiment, value stocks may have a long runway. And despite recent outperformance, value stocks haven't become overly expensive, adding credence to a continued value tilt. Finally, investors' dovish interpretation of July's Fed meeting, which propelled growth stocks forward in the last few days of the month, is uncertain and may disappoint. History suggests a post-recession rebound doesn't imply a resurgence in growth stocks. In the year following technical recessions, value had impressive gains over growth, especially in periods of high inflation. While recent market activity may suggest an inflection point in the value growth trade, past recessions suggest the value cycle is far from over.